In a stunning move, Fortescue, one of Australia's iron ore giants, secured a record-breaking loan, 14.2 billion yuan, nearly $2 billion USD, not in dollars, but in Chinese yuan. This is the largest offshore yuan loan ever to a non-Chinese company, signaling a bold shift away from the US dollar's dominance. For decades, the dollar has ruled global trade, but Fortescue's decision is a clear sign that the world is ready to explore alternatives. The move is more than financial. It's a geopolitical statement, especially as US protectionism under President Trump pushes allies to seek stability elsewhere. Fortescue's yuan loan is a hedge against Washington's volatility and a pragmatic nod to China, Australia's top trading partner. The real game changer? If iron ore itself starts being priced in yuan, not dollars, a move that could shake the foundations of global commodity trading. With BHP, another Australian mining giant, in tense talks with China's state-backed buyers, the possibility is real. Such a shift would challenge the commodity dollar system and the financial architecture that has underpinned American influence for generations. This is more than a currency story. It's a clash of economic titans with global consequences. At the heart of this drama are Australia's mining giants, Fortescue and BHP, whose fortunes are tied to China's insatiable demand for iron ore. Their decisions now carry geopolitical weight, forcing them to balance loyalty to the US with commercial reality in China. Across the table is China Mineral Resources Group, or CMRG, a state-backed powerhouse created to consolidate China's buying power and push for yuan-based payments. CMRG's goal: end Western pricing dominance and shield Chinese companies from currency swings. Looming over all is President Trump, whose America First tariffs have rattled allies and adversaries alike. For Trump, any move away from the dollar by a close ally like Australia is a direct challenge to US leadership. The result, a high-stakes chess match where every move could redefine alliances and global economic strategy. The actions of these players are turning routine business into a geopolitical showdown. China's push for the yuan in global trade is no accident. It's a long-term strategy to reduce dependence on the US dollar. For Chinese companies, paying for Australian iron ore in yuan eliminates currency risk and insulates them from US monetary policy. This is about economic self-reliance and resilience, especially as tensions with Washington rise. Promoting the yuan also boosts China's global influence. As more trade is settled in yuan, central banks worldwide are more likely to hold it in reserve. The Fortescue loan is a milestone, showing other international firms that yuan deals are possible and profitable. For Chinese steelmakers, yuan payments simplify finances and provide stability in a volatile industry. As China's financial markets mature, its banks are poised to play a bigger role in global trade. More yuan trade strengthens the currency, creating a cycle that cements China's economic power. The yuan's rise is reshaping the rules of global finance. Fortescue's yuan deal hit Washington like a shockwave, threatening the US dollar's status as the world's reserve currency. President Trump's answer: sweeping tariffs on Canada, Mexico, and China, aiming to protect American jobs but fueling global uncertainty. Instead of forcing compliance, these tariffs are driving countries to build systems less reliant on the US dollar. Exactly what Fortescue's move represents. The immediate result: market chaos and a temporary boost for the dollar, but long-term, trust in the US as a stable partner is eroding. Allies hedging with the yuan signal a loss of faith in the dollar's supremacy. If this trend continues, the US could face higher inflation and borrowing costs, undermining its economic power. For Trump, the optics are disastrous, a key ally choosing China's currency over America's. The administration is now trapped: double down and risk more defections, or back off and look weak. Australia is caught in a precarious triangle, its security tied to the US, its prosperity to China. China's demand for iron ore underpins Australia's economy, making yuan payments hard to refuse. Yet China also relies on Australia's high-quality ore, making a total break costly for both sides. Despite tough negotiations, neither side can afford to walk away. Their economies are deeply intertwined. The US, once a stabilizer, is now a source of disruption, with tariffs pushing allies like Australia closer to China. Canberra's pivot to the yuan isn't betrayal, it's survival in a shifting world. the pricing standoff between BHP and CMRG, and the push for Yuan settlement are tests of this fragile balance. Australia must navigate these pressures without alienating either superpower. The Iron Triangle is under strain, and decisions made now will shape its future. These currency battles have real consequences for ordinary people. In Australia, mining jobs and public services depend on stable trade with China. Disruptions could mean layoffs and economic pain. For Americans, the dollar's dominance keeps imports affordable and borrowing costs low. If that slips, prices rise and savings shrink. The US government could face tough choices: cut services, raise taxes, or print more money, all of which hurt families. In China, a stronger yuan and stable iron ore prices mean job security and national pride. The shift away from the dollar is seen as a step toward economic independence and a brighter future. Ultimately, this is a fight over who bears the risk in the global economy. The old rules are being rewritten, and the transition is fraught with peril. For families in Perth, Peoria, or Beijing, the outcome will shape their economic reality for years to come. With Fortescue's yuan loan setting the stage, all eyes are on BHP's negotiations with China's CMRG. If BHP agrees to yuan settlements, it could trigger a global domino effect, with more commodity producers embracing the Chinese currency. But BHP must weigh China's pressure against the risk of angering Washington and the challenges of using a currency tightly controlled by Beijing. President Trump faces tough choices: criticize Australia, escalate the trade war, or try quiet diplomacy, each with its own risks. Longer term, we may see the rise of regional currency blocs: the yuan in Asia, the euro in Europe, and the dollar in the Americas. This fragmentation would complicate global business and investment, introducing new risks and uncertainties. The outcome is unwritten. Will this be a blip or the start of a new financial order? One thing is clear: the contest between the dollar and the yuan will define the economic landscape for decades to come.